Welcome to the Modern Savvy CPA, where financial expertise meets the cutting edge of digital age. I'm Sherron, your host, a certified public accountant, here to guide you through the intricate web of numbers and regulations, offering a fresh perspective of the ever-evolving world of finance. So hi, this is Sherron, the Modern Savvy CPA. I want to tell you guys something. I'm a tax accountant, so I want to tell you guys today we're going to talk about taxes. And taxes and small businesses, taxes and businesses. Believe it or not, the revenue for the IRS that comes from small businesses is not from them paying taxes. It's from compliance costs. What does compliance costs mean? It's the biggest issue that businesses face regarding federal taxes. It's not your actual tax payments. It's the cost of compliance. Are you following the rules? Filing your information on time, filing the right elections. These are the things that cost small businesses. So here we say, this is the burden that hits small businesses proportionally harder than larger counterparts. One reason is because most larger counterparts have an accounting department that's very extensive, that is qualified, and is working with them full time, that they're making sure that all of their deadlines are met. With small businesses, one of the issues that we have is management, because we are good at our trade, and we're great at our trade, and we know how to build our revenues, but managing our business is where we probably didn't go to school for business management. So that's where it is. And one of our bad money habits is tax compliance and making sure that we're keeping all of our deadlines. According to the IRS, companies with under $1 million in revenue bear 2/3 of business compliance costs, which means that you guys are paying all the late fees, you're paying all the interest and penalties for not filing your returns on time, for not filing your elections correctly, for all these things. So this is what we're going to be discussing today. This bad money habit is wasting money. And like I've said before, I am okay with spending money in the right places to be maximizing whatever it is that I want to do or I want to accomplish, but wasting it is a no-no. Wasting it is a big no-no. You've worked hard for your money and you want to make sure that you're spending it and you're using it constructively. You want to make sure that you're doing what you need to do constructively. So we're going to cover the compliance. And like I said before, 2/3 of small businesses is the ones that are paying most of the compliance costs, because they're not filing their stuff on time, because they're finding that they don't think it's an important issue to look at. I got to do that. So one of the parts where we have compliance issues that are going is business organization. So while new tax laws have helped us with that, the tax code historically offers more tax advantages to small businesses over large businesses. So small businesses can be structured in a way that allows them to avoid double taxation. This is where we come in, where we talk about C Corp, S Corp, and LLC. So, as a small business, you want to make sure that you're, a pass-through entity, and you have the right layers. A lot of people start their corporation and they think that's it. No, you have to make the right elections after that. So you're starting the corporation, and you have to get the right advice to understand which entity is the best one for you. Of course, your goal is to have a pass-through entity. You also have to understand which entity makes sense for you. So if someone comes to you and tells you, an S Corp is always better, or a partnership is always better, and they have not listened to what your plans are, what you plan to do with your business, what you're doing currently with your business, they have to listen to you first to where your plans are, and then they can give you advice on what's the best entity for you. You do not want, there is no such thing as the best entity. There's the best entity for you. Everything needs to be tailored for you. So what my job is here today, what I want to teach you and educate you on is asking the right questions so you can have everything tailored to you. Your small business is where you're going. That's one of the things. One of the other things that we have issues with as small businesses is the dangers of underpaying our taxes. So when it comes to taxes, you have to make sure that there are a lot of issues that are present. First, small businesses are more likely to be in situation that often deals with cash, so you might have issues getting your information correctly. Some transactions might not be reported to the IRS, while expenses could be overstated, and in that same file you inadvertently or unintentionally, there are events where small businesses are at a disadvantage due to higher tax compliance, and you want to make sure that you don't have potential penalties and interest on that. So you want to make sure that you're not underpaying your taxes, because there are penalties and interest for underpaying your taxes. You want to make sure that you're looking at your payroll taxes, which we're going to discuss a little later, but that's one of the biggest compliance issues that I've seen in my decades of this business is payroll taxes and compliance with payroll taxes. Because remember, when you're withholding payroll, you're withholding it and holding it for your employee and then remitting it to the government. It is not your money. You're holding it, you're an intermediary, and you need to remit it to the government. A lot of people, when they have issues remitting it to the government, that is the only time that I know that the IRS will literally come knock at your door. One of the other issue is understanding the depreciation rules. This is some of the things that are, if you don't have the right tax advisor, understanding the depreciation rules, section 179, bonus depreciation, what things can be write off, when things can be written off, what the exceptions are, and understanding if you need to be doing it this year, you need to be doing it next year, when you need to be doing. That involves some planning. So you always want to make sure that you're talking to your accountant during the year, your tax advisor during the year, your consultant during the year about when you should be buying an equipment. Is it advantageous to take section 179 with depreciation on your equipment all in 1 year, or is it advantageous to spread it out over a certain year? That will depend on your company, your company's income, and kind of what your plan is for the next few years. I never ever tell my clients, oh yes, you should do this all in 1 year. I explain to them the benefits, because people think that depreciation is kind of like a magic formula. If you buy an equipment for $100,000 and you take a loan out on that equipment, let's say it's a 5-year loan, and you decide that, okay, you're making a lot of money this year, or you don't want to pay any tax this year, and you want to take section 179, and you are going to write this equipment off all in 1 year. So you're going to take section 179 depreciation, and you're going to take $100,000 of expense this year, 2023. What that means is you're going to have a loan payment for the next 5 years that's going to be coming out of your cash flow, that is not going to be an expense that you can take out on your books, because you took that expense already. You took it all in 2023. So for the next 4 and some whatever years, you're going to be paying this loan payment, $1,500 a month, whatever it is, and you're not going to be able to expense it because you already expensed it all in 1 year. So when you want to understand your cash flow, that's where you understand that there's a difference in your cash flow statement between what your company is making and spending and what is actually coming out of your bank account. Because that, however much payment that equipment is, the principal payment on that equipment is not an expense that shows on your on your income statement, but it will be an item, a line item on your cash flow. So that's where one of the differences between cash flow and your income statement, your profit and loss. One of the other things that, if you're not getting the proper advice or you're not doing enough tax planning, is understanding the different provisions that we have, the different certain deductions and credits that we have, understanding when they expire, when they don't expire, when you can take advantage of them, when you can take advantage of them. The tax law is a part of accounting that is always changing. So that is something, tax compliance is important in this way, because this is the part of the field that is always changing. There's always something happening within it. There's always something that you need to find out about. So, there are different credits that we have to deal with. During COVID, we had so many different little credits that we have to deal with. So you want to make sure that you're in compliant with everything when it comes to understanding the expiring provisions. For example, the ERTC program that I've talked about so many times, there are so many provisions to it. It is not a magic button. There are so many provisions. There are 4 different steps when it comes to that program that you need to be aware of and you need to understand. And now that program is listed as part of the tax fraud and scam list, where a lot of people are being looked at for that. So that's one of the things that we need to look at, those credits, when they expire, when can we take advantage of them, making sure that we're compliant just in case we're looked at, meaning we're audited for that specific credit that we're taking. So we need to look at that. So this is the Modern Savvy CPA, and this is why businesses should comply with their tax compliance. They should comply with their tax rules in their state and the federal government, and understand that once you're doing this, you break out of that bad money habits and start using the smart money habits that we've just discussed. Thank you so much for tuning in. As always, feel free to give me a follow to get updated on new and upcoming episodes, and listen in every Tuesday and Thursday, where I teach you smart money habits so you can make better money choices with a financial goal focus.